Fools, the state of pensions in America has been dire for years, and a number of private companies have really phased out their pension plans. That's left public government entities with pension plans that are still in financial trouble as well. And one firm thinks that a huge number of those public pensions could actually go under, be unable to meet their obligations to current workers and retirees. My name is Dan Caplinger. I'm the Motley Fool's Director of Investment Planning. And today I want to take a look at a study done by Bridgewater Associates. It's an investment firm, and they basically took a look at a number of public pensions and came to the conclusion that fully 85% of those public pension plans could fail within the next 30 years. The Bridgewater Report said that these pension plans have about $3 trillion in assets in total that they're going to need to use to cover $10 trillion in liabilities in the future. And so in order to bridge that gap, those pension plans have to make the most of the investment opportunities on that $3 trillion in order to make it grow to $10 trillion by the time they need to pay those obligations out. Now the challenge there is producing high enough returns in order to bridge that gap. Now Bridgewater thinks that you would need to earn about 9% returns on an average annual basis in order to cover the potential liabilities. Now that's quite a bit higher than most pension plans assume, and it's much higher than Bridgewater thinks is a reasonable assumption going forward, especially with bond interest rates relatively low. With stocks having had good performance over the past several years, the future returns of the stock market might be below historical norms, and that's a situation that can lead to below average returns for investment markets in general. Now, not everybody agrees with this study. Some think that this study is basically causing fear tactics that could cause trouble for public pensions in terms of public sentiment further down the line. But the real question is going to be whether the pension plans themselves are going to put themselves in a situation where they've overpromised on benefits, and whether they can take steps to rein in those promises in time so that when the crisis hits, if it hits, there will be an ability to solve the problem without dramatic consequences. Now, for more on pensions and your retirement, making sure that you can have a financially secure retirement for yourself, be sure to stay tuned to Fool.com for more ideas. Thanks for watching, and Fool on.